Welcome back to Investing Talk Podcast.
Today we're looking at the U.S. Cannabis ETF, MSOS.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. What's immediately striking here is the resilience. I mean, this is a sector a lot of people just left for dead.
Doubly written off.
Yeah, and despite all those headwinds, the ETF has pulled off a 26.7% year-to-date return in 2025?
That is a staggering number.
Yeah.
I mean, for a group of stocks that has been just, the definition of disappointment for years, it just screams that something has fundamentally changed.
It has.
Or at least the market's perception of it has. What's really driving that rebound? Because I remember looking back to last fall, we saw that huge, 130% rally in just 3 months.
That's right, leading into September 2025.
And that whole move felt like it was built on pure hope, on speculation about reform.
It was all anticipation. But the thing is, the underlying structure of the ETF gives it the fundamental power it needs if that anticipation actually pays off.
Okay, so how is it structured?
It's highly concentrated, and that's really important for our analysis here. The top 5 holdings, you're talking names like Curaleaf, Trulieve, Green Thumb, Verano.
The big players.
The biggest. They made up a massive 84.04% of the whole portfolio back in Q2 of 2025.
Wow. So with that level of concentration, you as an investor, you're not really buying the sector. You're making a very high conviction bet on the handful of companies that survive the chaos.
And that's precisely where the competitive moat is. I mean, these MSOs, multi-state operators, they aren't just successful because they have good products. They're successful because they've mastered this incredibly difficult logistical and, regulatory puzzle.
Right.
They dominate market share in the most important high-growth states. Think Florida, Pennsylvania, parts of the Midwest.
So it's not about the product, it's about the plumbing. They're building these complex supply chains and regulatory know-how that just, it acts as a massive barrier to entry.
It's a logistical nightmare that only the big guys can afford to solve. They are vertically integrated, so they control the whole process from, cultivation and processing right through to the retail dispensaries.
And that control gives them efficiencies.
Huge efficiencies. And cost advantages that smaller competitors just can't touch. I mean, think about the compliance expertise alone. Navigating 50 different, often conflicting state laws, that is a full-time, very expensive operation.
So if I'm looking at this, I'm seeing companies that have already paid their, let's call it regulatory tuition.
Yeah.
That must give them a huge leg up on, say, the Canadian licensed producers.
Oh, absolutely. The Canadian LPs, they fundamentally lack that U.S. multi-state footprint. Their expertise is in a federally legal market, which is, it's a whole different ballgame.
A much simpler one.
Exactly. The moat for MSOS isn't really brand loyalty just yet. It's built on regulatory mastery and operational scale. That's what makes this the purest way to play the regulatory upside.
Okay, that all sounds very compelling. A strong fundamental picture. But now we have to talk about the elephant in the room.
Mm-hmm.
The reason this sector got so crushed in the first place, the financial reality has been, brutal. Revenue growth is there, but the profit margins are getting squeezed by that one toxic rule, 280E.
That 280E burden is the anchor. It's what has weighed down the entire sector for years, and we really need to explain why it is so crippling.
Yeah, let's break it down for anyone who doesn't deal with tax law.
Okay, so under 280E, cannabis businesses are prohibited from deducting normal business expenses. Things like rent, utilities, even employee salaries. They can't deduct them from their taxable income.
Unless it's cost of goods sold.
Right. So imagine you run a really successful restaurant. You make $1 million in revenue. Your ingredients cost, say, $300,000, and everything else, rent, staff, marketing, costs another $500,000. Your net profit is $200,000.
And most businesses get taxed on that $200,000.
Exactly. Under 280E, these cannabis operators are essentially taxed on maybe not the full $1 million, but on the $700,000 gross profit. They can't deduct those massive operating costs.
It's mind-boggling. It means they're facing effective tax rates of, 70% or even higher sometimes? How are these companies even coping with that?
By being incredibly efficient. We are seeing operational efficiency start to kick in, especially in the more mature markets like Florida and Pennsylvania. It's giving them a bit of a buffer.
But the pressure is still immense.
It's acute. They have some cash reserves, but we're also seeing high net debt across some big names like Curaleaf.
And that debt is the real vulnerability, right? Especially when capital is tight It's a vicious cycle. The tax code kills your profits, which makes borrowing more expensive, which strains the balance sheet even more.
Precisely. And we saw the market punish that exact vulnerability earlier in 2025. When all that regulatory hope stalled out, MSOS itself reported huge NAV declines. It was a brutal 31.13% drop in Q1.
And then it dropped again.
Then another 8.90% decline in Q2. I mean, that shows you just how violently these stocks get punished when optimism fades. This is not a safe sector. It's a leveraged bet.
Okay, so the fundamentals are strong, but the financials are, frankly, crippled. Let's pivot now to what the market is actually doing, because the charts are telling a very different story than the balance sheets.
Yeah, the technical picture is fascinating.
We saw that really powerful bullish reversal back in April of 2025. The stock bounced hard off its lows around $2, and crucially, it did it on surging volume.
And it formed a clear series of higher lows. That's the key. That signals real accumulation.
People are buying the dip and holding.
Right. And analysts are watching this chart formation very closely. There's a potential cup and handle setup here, which is a classic bullish pattern.
What's the key level to watch for that?
The big resistance is at $7.08. If we can break through that, the technical case gets a lot stronger. On the downside, $6.59 is the support level to keep an eye on.
And this wasn't just, a retail flash in the pan. The institutional money is backing this up. We saw a massive spike in what's called dark pool activity.
Yeah, that hit 38% of the volume back in April.
So for anyone unfamiliar, dark pools are where the big institutions trade. They're executing huge block trades off the public exchanges.
They do it because they want to get positioned quietly. They don't want to drive up the price and show their hand to all the retail traders. It's a huge signal of confidence.
And now those quiet moves are becoming very public. We've seen, 18 straight days of inflows into MSOS?
18 consecutive days totaling over $100 million.
$100 million. That is not accidental money. Someone is very confident about something happening and happening soon.
They are confident the political risk is finally about to resolve itself, and they want to be fully loaded before the news officially drops. That level of persistent, concentrated buying, it's a serious signal.
We're seeing that same feeling in the options market too, right?
Absolutely. The options market is often the best tell for what traders are expecting. The put-call ratio is sitting at a very low 0.2.
And the average is higher.
The 52-week average is best 3. So when the ratio is this low, it means traders are overwhelmingly buying calls over puts. They are making big bets on a 2025 recovery. The sentiment has completely flipped.
From fear to anticipation.
And that brings us to the catalysts. The reason the market is willing to look past 280E for now is the speculation around a potential Trump executive order to reclassify cannabis to Schedule 3.
Okay, let's explain why Schedule 3 is the holy grail here. Right now, cannabis is Schedule 1. That puts it in the same box as heroin.
And crucially, that's the category where 280E applies. Yeah. Moving it from Schedule 1 to Schedule 3 would be, it would be game-changing, instantly.
What's in Schedule 3?
Things like Tylenol with codeine. But the most important consequence is that Schedule 3 drugs are exempt from that crippling 280E tax rule.
So overnight, these MSOs would stop being taxed at 70% on their gross profit and start being taxed on their actual net income, like a normal business.
Exactly. It completely changes the business model. It would instantly boost profitability for the entire sector. You'd see these high-debt, marginal businesses turn into cash-generating machines.
And it would help with banking, too.
Massively. It would improve federal banking access, which is crucial. The cost of capital would just plummet.
So that debt problem suddenly becomes much, much more manageable. Are there any other political dominoes that could fall?
We are seeing some traction on other fronts. There's the States 2.0 Act, for example, and we shouldn't overlook the precedent that was set by psilocybin rescheduling. It shows the DEA is already moving on these kinds of substances.
So the wheels are already turning.
They are, and analysts are building that optimism right into their forward guidance. That's why we're seeing such high expectations for earnings.
Okay, so what's the timeline? When are the next potential data points for investors?
Well, we're looking at the Q4 2025 earnings reports. They'll be out in January and February of 2026. The consensus is that they'll show continued revenue stability and maybe even some beats from the top holdings.
But we have to talk about the biggest risk. What's the nightmare scenario here?
It's the same risk it's always been: regulatory delays. This sector has disappointed investors for years. Stocks are still down, 70% from their 2021 peaks?
Right.
Political inaction, DEA inaction. That is the single biggest threat. But the asymmetry right now is what's so interesting. The current price levels already have so much pessimism baked in.
So the downside is kind of limited.
It feels that way. If the reform catalysts hit, the upside is potentially exponential. If they get delayed again, well, a lot of that pain is already in the price. You're basically getting a discount while you wait for the policy to break your way.
Okay, so let's try to synthesize all this for the listener. MSOS gives you this highly leveraged exposure to the biggest U.S. cannabis operators. They have these strong moats.
But they're priced at these really depressed valuations because of that 280E tax anchor.
Right, and now we're seeing the big money, the institutional players, positioning for a reversal that's tied directly to federal reform.
The entire investment case just hangs on that reform materializing, specifically the Schedule 3 reclassification. The momentum is undeniable. I mean, based on the technicals, the institutional conviction, the outlook is quite positive.
So it sounds like you're leaning pretty bullish.
Very bullish, but you have to account for that political volatility. That's the wild card. The target horizon for this, I think, is a swing trade. You're playing for the Q4 earnings or more likely that reform news, probably within the next 3 months.
But there's a longer-term play here, too.
Oh, for sure. The real long-term wealth-generating play is scaling into a multi-year hold, but only if that federal progress actually happens. That's the event that flips the switch and turns these companies into sustainable, long-term growth engines.
So that's the ultimate question for you to think about. Do you trust the institutional money, which is screaming that a catalyst is imminent? Or do you trust the history of political gridlock, which has defined this sector for years? If that catalyst doesn't hit in the next 90 days, how patient are you going to be?
You have to keep tracking the news flow, especially what's coming out of DC and the DEA.
If you enjoyed this analysis and want to stay informed on market-moving catalysts like this one, make sure to subscribe and turn on notifications so you don't miss our next one.